Just start my stream in a second. There we go. Okay. Fine. Should be going live shortly. Thank you very much. Okay, let's figure out what. Okay, so it should be. Let me just check this. Okay. Hey guys, sorry, I'm just sorting out some sound issues currently at the same time. I'm a little bit late on this, but yeah. Thanks for joining. Just give me 2 minutes, okay, guys? Right, I think, can everyone hear me okay? If you can just put an X in chat or something, I'd appreciate that. Yeah, excellent, cool. All right, well, firstly, how's everyone doing? Are you all good? Yeah, cool. Yeah, I'm good. So there's a couple things primarily. Let me just take my headset off. You don't need that. Probably should be a bit more organised for this in future, guys. I kind of spur of the moment. I know a lot of people have been wanting the stream again, so it's kind of I figured I'd just get on and do it. If I'm always waiting for the perfect time, then it's never going to happen, as we know in trading. All right, so let's get to the crunch on Bitcoin, shall we? Hi Peter, hi Lewis, hey Hatter. So yeah, a lot of people are like, wondering when the bleed's going to end with Bitcoin. Okay, now we are breaking out of the channel low here. Okay, in which primarily could signify the end of the bull run. Could, not saying it will. Okay. What I'm accounting for here is this basically, where we had a 8% play below. Okay. 8-9% play below the candle. Channel floor. So that's kind of what I'm doing here. So I have put out some limit longs. Okay, if we go for 8 or 9% here, so we're looking about 85,000 for invalidation generally. Okay, which is around about the support here, which is good. Okay, let's mark that up. We haven't got this marked up yet. So somewhere about here, and I'm going to mark this as, let's make it a little bit thicker, 2 pixels, and make it green, red, I guess, that'll do. Cool. Okay, so that's technically where I think invalidation will be. Okay, I've been using this chart constantly and persistently. Okay, I haven't really changed much of it, as you all know if you follow my channel. I've got my first limit was here, which is this green line here. So first buying was 93,194. I've got a second at 94.40 and a final at 88,334, with the stop below here. Okay. The reason why the stop's there now, it's a liquid stop. Okay, so it depends very much what the chart's going to do. Okay, but we'll be targeting the top of the channel. So if we'll put a long and a short there. So just very hard. It's a bit laggy. I do apologise. That's something to do with my system. I'll probably need to reinstall Windows. So that only shows as a 5-hour trade there. But I mean, primarily if we DCA, it'll come back down to about an 8-hour trade, something like that, if you want to do an R trade. But if you're looking at percentage wise, it's a lot better. That's just there to visually show you. Okay. Right, now, I don't really want to do too much on Bitcoin. I post about Bitcoin all the time. So everyone's pretty much savvy on Bitcoin. Today I want to sort of just go through some of the alts, okay? I don't even have Ether on here. Let's have a look at Ether, shall we? I am still currently using Mexy's charts. For full disclosure though, I haven't traded for probably about 2 months now. My driving license expired. I have a medical driving license and it needs renewing every 3 years. Unfortunately, that 3 years has turned around now, so I've got to wait till I get issued a new license, so I can re-verify my KYC. It's a bit of a nightmare, but it is what it is. Right, okay, let's have a look at Ether, shall we? Let's have a look. It's not a bad line actually. So I'll just drop that there. Put this as an uptrend. Okay, a lot of you will probably be thinking, why have I just drawn a line straight across like that? Okay, the market is dynamic, it's fluid. Okay, it's not just straight horizontal lines, it's also diagonal. Okay, so as you can see, as the market reacts at these levels, okay, so it's reacting at these levels diagonally. Use diagonal support and resistance. People don't use it, people say it's nonsense, but look at it. One line gives you the overall agenda. Okay, so if you lose this line, if you lose here, then yeah, primarily we could potentially see lower, like here. Okay, so that was just one simple line, nothing else. Let's do some Fibonacci, shall we? We don't need to complicate trading. The reason why I'm going so far back first is because I want to give us a decent overview of the actual market. Okay, and this is important no matter what market you look at, okay, because you're looking at the levels for reactions. So you can see the 382 has provided quite a strong level of reaction. Okay, the 0.5, now as you can see, we've actually got a good bit of confluence here. Okay, so it crossed over. Now it's never exact, it's normally a couple of days out, which is what we've got. Okay, and it's actually bouncing. Okay, so that's not too bad. That's a good sign for Ether. Okay, what isn't so good on this pull is how it's rejected off the 6.6 there. Okay, so what we do, we want to keep this nice and tidy, because if we don't keep it tidy, our charts start to look messy. Okay, and messy charts no one can read. So let's tidy this up a little bit. Let's put sorry, not confluence, golden pocket. Okay, we want to keep that over there. Let's have a look. The I am going to mark up the 0.5 to here, I think, because that sums it up. Just trying to move the mouse up a little bit. There we go. Let's put this as, I would mark it as confluence for now. I think just for argument's sake, I don't really have a filter for it. And again on the 382, that I'll mark this up as confluence also. Okay, so now if I delete this, the chart's a little bit cleaner, okay, and we can see the levels we're looking at. Now one thing we do want to always do is we always want to overextend. Okay, can't really overextend that too much because the angle, but that's fine. I love how that's bouncing around a little bit. That's not where I draw it. I'll report that as a bug with Take Profit that it's doing that again. They're pretty good. I like Take Profit, by the way. If you guys want a referral for Take Profit, they're great. They do work hard to fix bugs and issues. Some take a little bit longer than others to fix. They're not quite TradingView style or as good just yet, but they're certainly very competitive with TradingView already, and they're an early company. Okay, I don't use TradingView now unless I absolutely have to. I full-time use Take Profit, so it's just sometimes little bugs like this. This is the first time it's been jumping around for me in a long time, but it is what it is. All right, let's have a look. Now, while we've done a bullish, we also want to mark out sort of the bearish. Okay. Now, there's a reason why we do this. Okay, it might not be so transparent now. Okay. But at the moment we're playing between a range. Okay, let me get the path tool. Okay, by doing the uptrend and the downtrend, as you can see, and using it as support and resistance, okay, we can see that this is the range, and we can expect to see something like this. Yeah. Now, the reason why I've drawn that through there is because I do expect it to sort of bounce off the golden pocket. Okay, if it is the end of the season and we're going into a bear market, this is what we're expecting to see. Okay, a bit more. It's going to be a strong rejection. It's going to break through that trend line. Okay, that's one scenario. Let's have a look. Could potentially, I don't know why I'm trying to be so exact. It could just do this as well and bounce off and break through there, for example. Okay, which if that's the case, what have we got here? A W pattern. What is a W pattern, guys? Does anyone know? Peter, go on, you should know this. I'm going to put you on the spot now. Wyckoff bullish reversal. I haven't heard of that. I know who Wyckoff is. I'm going to Google that. Me don't speak English, twat. Sorry, excuse my language. Wyckoff bullish reversal. I'm going to have to Google this. Hold on. Let's have a look at Wyckoff Analytics, I suppose. Be their site. Let's have a look. 5-step approach, blah, blah, blah. Go away cookies, don't like you. Okay, this isn't actually showing. No. Okay, it's quite it's far too in depth for my liking, if I'm honest there, Lewis. I like to keep it nice and simple. Let's have a look on this one. I can't see anything there, no. Okay. No, I'm not going to go clicking links. Okay, so the W pattern is actually like a Gartley or a bat. Okay, so harmonics. So if I put W pattern trading, okay, there you go. comes up multiple times. You know, a guide to trading W's and M's. Okay, they're Gartleys or bats, harmonics basically. So if I type in Gartley pattern, yeah, you're funny, mate. Okay, so this is a bearish Gartley and a bullish Gartley. Okay, so W's and M's, they're harmonics. Now let's have a look at a bat pattern. They're all pretty much the same thing with different names. Yeah, so here's your M, here's your W on a bat pattern, and bearish and bullish. Okay, I just call them W's and M's because there's so many different names for them all, different styles. You know, I've never looked into this white line, by the way, is because I don't run hardware acceleration on the browser because it causes micro stutters in my games. So yeah, I need to sort that. And just ignore that. That's not actually an issue with Take Profit, by the way. That's an issue with my browser. So this W here, if that was to play out, would be, what would it be, guys? Would it be bearish or would it be bullish? I'm bullish. Why do you think it'd be bullish? Okay, I'm going to put you guys on the spot, and I want you guys to put me on the spot too. That's how the streams work. Let's go. Okay, it's about learning, educating each other, and helping each other. So I want to know why you think that's bullish, and then I'm going to show you something. Don't like how these keep moving. I'll have to report that. It's a reversal pattern, usually plays out as bullish, form a downtrend into an uptrend. Okay, can't argue with that logic. I actually can't argue with that logic. Okay, what I'll show you is on Bitcoin. Okay, when it decides to finish loading. Okay, so where you say it's a reversal pattern, I would agree, because when you have a W, okay, here it's reversed. Okay, also when you've had a W, for what it's worth, you find these W's and M's absolutely everywhere. Okay, there's one down here at the bottom. Okay, and it's technically reversed. I mean, it dipped down a bit into the channel, but that's two indicators there. Okay, but it reversed. So yes, you're right. Okay, and we've got another one here. Look, we've got a W here, and it reversed. Okay, now we don't have a W shown down here just yet, unfortunately, but the W's and M's, they are there all the time, okay, and they're really good. They play out consistently, and the more you see them, the more you can't stop seeing them. Okay, so let's go back to Ether. Okay, I think I was drawing on the wrong chart, and it's just provided my old drawing. Lovely. Okay. Let's delete some of this then. I think I had a box there. Did I have a box there? It's somewhere I can't click it. There we go. No, I was trying to do a cup and handle on a micro tier. Okay, let's go from this chart, shall we? Like, I've got the same sort of floor trend line here. Okay, going right from the floor. Okay. Now, theoretically, we can lose a trend line floor and we still remain bullish. So this arrow here, this is the long-term trend. Okay, we did lose it here and we broke back through. Okay, so sometimes losing an important trend line doesn't mean it's the end. It really doesn't. Okay, breaking above this was quite interesting. I wanted to see if we would hold it. Why did I want to see if we'd hold that? Okay, I'm not going to wait for an answer this time. The reason why I wanted to see whether this would hold, okay, is because this is now all psychological. Okay, all this. Because you're going at same highs as the last run. Okay. So for it to actually, if it flipped and held this, that would signify, at the time, it would have signified that we would have gone into alt season. Okay, because this is a crucial level. Okay. In fact, it sort of danced around a little bit and then we lost it. That's just the way it is. Okay. In terms of support at the minute on Ether, we're looking about 2670 somewhere. Let me put a support. So if we're looking at the top, okay, let's snap it to the bottom of these. These are very clear here. Keep snapping to my indicator rather than the actual candle, which is a bit annoying. Okay, so that support line right there. Okay, I need to change the color on my channels and a few other things. Don't worry about that for now. So what's that? 2800 exactly. Okay, that's the first level of support, and that will come through down to 2400 roughly to encompass this whole area. Okay, now we should ideally be expecting a bounce. So there's no point me drawing any more Fibonacci levels. We've lost these, so I'll delete them. Okay, I don't know why I got a 1 there. It's interesting. But the Fibonacci level that I've drawn here from the bottom to the top, okay, that's the golden pocket there. I'll redraw it just to show you. I can get it on. The problem with not having hardware acceleration on when I'm doing this makes it a little bit harder. The site needs hardware acceleration, but I need to reinstall my operating system really. So, okay, so that's done that there. Why has it done that there? I often find this happen. Did I reverse it? Nope. Okay, maybe I'd done it to that level before all this. Probably about right. Sometimes when I haven't updated a chart over time, that will happen. Let's do that there. Okay, let's now move. This up. Okay. Okay, so that marries up actually because we're rejected on the 6-6 here. So we're looking at the 382, which is surprisingly this level here, just below. So we've got a area of confluence there. Let's mark this up. It's very important to mark confluence. Why do we need to mark confluence, guys? Do you guys know? Go ahead, chop chop. I forget there might always be a delay on the stream as well, so apologies. The 236 previously been in play here at the bottom of the channel, which was good. Okay, we can break while I'm waiting for an answer. We can remove that channel now, so it's not needed. Yeah, exactly, Faisal. You're looking for where there's signs for a potential bounce or reversal. Exactly that. Okay. What we can do here is do a diagonal support line. Why am I doing a diagonal support here, guys? Downtrend. Just mark that as an uptrend. Okay, retest off it. Yes and no. Okay. If it's a rebalance, then it's a good level to long generally, or vice versa for shorting at resistance. Yeah, exactly. Yeah, confluence is important. Okay, the reason why I'm doing this, okay, is I can see now not only is it where it's bounced off the golden pocket, okay, it's also bounced off the trend line, which tells you it's going down further. Okay, so you can use these to find position entries. Okay, a lot of people don't actually use or know about diagonal support and resistance. Honestly, they're gold. Okay, so if I, for example, if I was to do this just straight down here, okay, along there, I've now at the bottom of this trend line coming up now, I could have potentially entered along here if I had this diagonal resistance line. Okay, if I had that marked up and I identified the uptrend change in, okay, which would have been 1, 2 touches, second touches, so you'd have got that, okay, and you could have marked it up and gone long. Okay, and your closing of this trade, I'm just going to show you. Okay, this is what I teach in my mentorship, by the way. Okay, so from here, I mean, Peter will tell you I teach this exact thing amongst other things. Okay, there, and your stop loss should always be below the recent lows. Okay, so your recent lows would actually be here, so we're going to have to zoom right in. Okay, so I mean, all right, on this one, your stop loss would be hard to place, okay, because your recent low is higher than the low here. So for this, hold on, you'd be putting it on the bottom of that candle, and you'd be placing it just below that there. Okay, that's it. That's your position. Okay, now obviously, don't get me wrong, this is so easy to do when you do it in hindsight. Okay, it's so easy to look back. Okay, but that's a 72-hour trade just by sticking to those rules. Okay, I mean, like, yeah, you can all think, oh, like, you know, that's nonsense, whatever, you wouldn't have played that trade. No, but like, you could have, for example, if you wanted, put it below there. It's still a 20-hour trade like that. Okay, but anyone that knows me knows I like a tight stop loss, and I always put it below the recent lows or below my invalidation, which would have been this trend line here. Okay, anyway, that's an easy one. Okay, that's an easy one to show why I teach this method, and you can do that on any time frame. Okay, any time frame. It's dead simple. Okay, now this one, for example, where it's reached the top, it's always a bit hard to understand where the top would be. Okay, so where would you find that top? Let's have a look. Okay, because it's obviously not there, is it? Okay, but that would be your pivot point, your entry. Okay, so you want to possibly try and find out where to go. Okay, so this is where you just draw more lines. It's that simple. Okay, and other points. Okay, so because here your stop loss is down here, this is safe. You could allow this. Okay, so what you could do is draw another arrow, for example, from here. Oh, wrong one. Now, some of you might be thinking, like, what's he on about? Like, why is he doing it like this? This isn't how you should trade, blah, blah, blah. Okay, but think about it. Okay, I'm going to challenge you right now. Okay, why can't you trade like that? If you entered down here, where I said, okay, on that confirmation, if you entered down there, your stop loss is down here. It's not up here, is it? So your stop loss is down here. So as long as you haven't touched your trade, you're still miles away from your stop loss, so you may as well just let it play. Okay, if you didn't let it play, you'd still have made a good bit of profit. Let's have a look. Okay, so say you exited right on that trend line again. Okay, that's still a 20-hour trade right there. Okay, so that's still a good trade. You can't argue with that. But, you know, we're not here to make little trades, are we? The trend hasn't been invalidated, has it? I could understand if it closed below and you wanted to trade it, but it's not closed below that line that you've drawn. Okay, it's important that you overextend Okay, so always extend to the right or extend to the left, whichever way you have your chart reading. For me, it's to the right because the chart always moves to the right. So overextend it to the right, and then you'll see, okay, so historically you will see as the candles progress, if it comes back up now and breaks one of these trend lines, for example, then we know to get out of the trade. Okay. At the minute, I mean, this seems to be deviation, so we could let's have a look. This is hard because we don't have the lines drawn here. Okay, but what we do have is the long-term trend. Okay, so we've got the long-term trend line here, which gives us this area. I don't think I can draw this area, maybe with a triangle. Let's watch this area. Okay, and then let's make it grey. Why is that done just the border? Okay, so we've now got this triangle area. What are we looking for within this area? Do you guys know? Let's see, Lewis is typing, so I'm waiting in anticipation here. He stopped typing. Alright. So, okay, so what we're looking at here, okay, is we're relying now on the fibs and our other tools. Okay, we're looking at the levels. Okay, so we broke through this support. It's actually bounced quite off this support. So now we're looking at the 382 and the confluence. Okay, we're looking at this to hold. Okay, so we're looking at levels. So we should already be in a short here on ether. Okay, we should be. If you didn't get in at the top here, maybe you got in here. Or if you didn't, maybe you got in here. If you didn't get in here, you're late. Why are you late? Shall I tell you why you guys are late, or can you see it? The chart's easily telling you that you're late to the trade. Can you see it? Waiting for an answer here. Multiple lines being broken and support shift in market structure, really. Close. Okay. You're late because look at this, right? This was where it changed, okay? We'd never have got the top, realistically, okay? We wouldn't. Not with this style of trading, we wouldn't have got that top, okay? But we could have used that top and started drawing our trend line, okay? This gives us our first trend, okay? Now, what actually confirms that is this bit, okay? But what tells us that we're late into the short is this. See these two candles here, blast and above? Okay, swing failure pattern, pretty much. It's not quite because the bearish candle is a bit bigger than the bullish candle. Let's zoom in a bit more so you can see. Okay, that was the same. If that closed above the line, it would have been a bit of a contradictory swing failure pattern because it would have closed above the trend. Yeah, so instead it's had to drop below. And what we've actually had, okay, this is where the market is telling you guys are late. You probably never got in there, okay? Traders that trade like this would have seen us getting in here, okay? Now they're shorting. Their first take profit would be this trend line, okay? Again, you put your stop loss just above. It doesn't need to go far, just above, okay? Right, now, however, that's come back down, hasn't it? Okay, so you've made your 27R trade because it blew through. Okay, it blew through. There's no point closing the trade out here. This is such a small trade. There's no point. It didn't even retest that line. So why would you close your trade? Let it play. That's a 27R trade to there. Okay, to that support. Okay. However, it's come back up, right? And this is where you're late, because if by now you should know to be entering on that line. Okay, look what happens. Same thing, you're entering on that line. Okay, it stopped you out. Okay, this is how the market works when you're talking about liquidity and market makers, where they're searching for the players. You are late. They're telling you you're late. They're stopping you out. Okay, some people try and be clever, increase the stop loss. Okay, get stopped out. They try and be clever and raise it above the candle close, get stopped out. Okay, they try and do it at entry, they get stopped out. Okay, the levels are there, they don't lie. Okay, so that's how you know that you're late to a trade. Okay, so what you'd want to do in this situation is you'd be waiting for this. Okay, now let's have a look on this one where you put your stop loss just above. That's what that little wick is at the top there. Okay, that's stopping the short players. But potentially you could do that and turn that in. That there is now a 20-hour trade. Okay, I'm showing you this in hindsight. Okay, this is easy in hindsight. Okay, because the data's there, it's easy to show you this. Putting it into practice is difficult. Okay, except is it? Because after you're late, the market gives you a chance. That was your chance. Then it takes. Then it gives you a chance again. Okay, now this time it front run. Okay, you could have easily gone into a short here. Set your stop loss above the trend line. There's a 43, 44-hour trade. Okay, so when people are posting about these small 3-hour trades and saying they're great and stuff like that, just look at what the market's telling you, what the market's doing for you. Okay. So yes, again, I will reiterate, it is easy to show you this in hindsight. Okay, but ask Peter, he's done my mentorship, he knew nothing about trading beforehand, and you'll see in the profits, he's always tagging me his profits that he's making since. Okay, so why settle for 2 or 3 hour trades when you can make trades like that? Okay, anyway, let's stop with the educational side of it now and start trying to do some analysis, shall we? Okay, so we've effectively missed this. We'd be looking for a bounce at a 382 level. Okay, so you could set a limit long. So have a look. Set a limit long on the confluence. Okay, so it doesn't matter where, but you'd be targeting the top of the channel. Okay, so targeting top of the channel, or because the golden pocket's there, probably just go just below the golden pocket and watch the levels. Okay, the stop loss, you want it so if you're wrong, you're out the trade as soon as possible. Okay, so you put it just below like that. Okay, there you go. There's a 13-hour trade. Okay, that's the plan. Who knows? It might just fail. But if you're only putting $1 in or $10 in or whatever, 1% of your portfolio, it doesn't matter, because if you lose that, the next trade that you'd be looking to take, if that fails, is this level here. Okay. So again, you're playing that to the top of the channel. Okay, let's put it over here this time. Okay, and you play the levels when you can identify where the trend changes by moving the diagonal supports and the trend lines. I call them diagonal supports rather than trend lines because they're different. Okay, this big blue one here, okay, that's jumping around, that really shouldn't be jumping around, but it is. That there is a trend line, okay, because it shows the absolute bottom, okay, until obviously here. The diagonal supports are where you're bouncing off the trend lines. Okay. Now I find it funny because a lot of people have left the chat. They don't understand it. They think I'm chatting garbage, and that's fine, you know, or they're just getting bored or whatever. There could be all sorts of things. But I promise you, I'm not chatting garbage here. This is what you do. If you do it time in, day out, the same thing. You build a bit of intuition up. Okay. So ether's okay, but currently it's a no trade zone. Okay, you've just got to wait at this point for that confluence or the bottom of the channel. Okay, let's have a look. Sol, should we have a look? Okay, so okay, so I don't know if you guys can understand this chart. Can you understand this chart that I've done here? Okay, it's the same thing across all my other charts. Main way how I visualize things. Can anyone explain it? I mean, that's probably putting you on the spot a little bit. I don't know. So we've got the golden pockets from different levels that I've drawn the fibs. Okay, and then I've marked confluence. So, well, not really confluence. Yeah. Okay. Right. So I'm going to remove them. Okay. They're all good, but they're quite close on the confluence points. Which Sol, when you're trading with Sol on the Fibonacci, like you would anything else, Sol always acts just past or just before the Fibonacci. Okay, but there's always bits of confluence between those levels. So between the Fibonacci and support, for example, or Fibonacci and Fibonacci level, they're quite close and give you this confluence. Okay, and often the confluence lines up better than the levels itself. Okay, so if you traded on confluence levels on Sol, you'd do generally quite okay. Bad bit of gas, and I apologise. So on this one, basically, I'm looking at, so this would be my first entry for a potential long when my target's here. Okay, but that seems to have blown right through. Okay, so the only thing that we've really got going now, okay, because if I draw Fibonacci from, I don't think I've actually done one from here to the top yet. Okay, well, you can see the 236, it's just gone through the 236, so we want this to close above. Okay, if it closes below, but like this is what I mean, so like it closed below here but then ended up shooting above, so it's just past the Fibonacci. Okay, so on that we can give this a bit of grace. What we don't want is for this to close any lower, really. If it closes lower and drops, and we're coming down to here, which is $47, because like there isn't a lot here. You've got a little bit of support. Okay, you've got a little bit of support around there. That's your floor. That's 106. If we lose 106, there isn't really much here. Okay, so then we are in a bear season. There isn't much about that anyone can do. Okay. Now I'm hoping we're not actually in that bear season yet. But those are the points that I've got marked up. Okay, Doge. Let's have a look, or Doge, should I say? So Doge, I correctly identified the channel, and it dipped through. Okay, it's fallen through the channel. Let's have a look. Again, there isn't a lot in the way of support, and we'd be looking about 12.6 for Doge. Okay. Adder, I haven't actually looked at Adder for a while, but this looks interesting. Okay, like look, you know, when I'm saying about diagonal support and resistance, I do use it. It's right there. Okay, like look at the level. Look at the level. So identified support and it peaked, dropped down to the low. You know, yeah, exactly. You know, I don't either. So the fact that we've closed below this now, tells me we're coming back down to the lows here. So about 35. I don't like that. I don't like the way the market's looking. I really don't. Okay. I do in a sense, like, let's take the money, can people hear me? Because Simba's saying I wasn't talking. Let's have a look. Okay, all right. No, that got so. Okay, sorry. Yeah. So again, it bounced off the 6-6, went lower, closed out there. I mean, I don't like it because everything is bearish. Like diagonal support and resistance here as well. And it's closed over. I don't know why I delete that. The lines moved because where that green is, I don't know. Yeah, I mean, again, it's down here, $10. That's all I'm seeing is these overall supports. There's a lot of major support here on Link, but it's at $10. This wick tells us that we might even come down to $8. I'm sure you guys can see all this as well. I mean, it's not nice. You'll also see like my indicator, by the way, is on take profit. Okay. It tells you up here bearish accumulation, tells you the RSI value. I also see people chatting a bit about the RSI in the chats and saying how bad it is and stuff like that. The RSI is actually really useful if you use it correctly. Okay. And when I say correctly, I don't mean if it's below 30 you go long and if it's above 70 you go short, because like that's just like you do use it like that, but you don't use it like that. Okay, let's be honest here. Okay, the RSI is just an indication. You don't act off the RSI by itself. Okay, now generally when the RSI is below 20, that is 100% when you want to be going long. Okay, when it's above 80, that's 100% when you want to be looking for shorts, because if you put a bar level over your chart for RSI levels being at 20 and 80, you'll see that's quite rare. Okay, and they are pretty much perfect opportunities. Okay. What you've also got to take into consideration is the time frame. Okay, so if I go on the 15-minute, this is Rune, by the way. Okay, on the 15-minute, the RSI is 39. On the hourly, it's 36. Okay, on the 4-hourly, it's 39. So we've got two matching so far. On the daily, it's 34. Okay, on the weekly, this is actually 33. And on the monthly, it's 39. Okay, so we've had 3 at 39 so far. That tells you that it's not ready just yet. Okay, I mean, Rune actually isn't too bad on the RSI, but it's not ready yet. Okay, let me try and find what's world like. You know what? Let's look at Sui, because everyone's always going on about Sui lately. Don't know why. It's just another token. I mean, the cup and handle failed. Yes, because I do like cup and handle patterns. I really do. Oh, wrong one. Let's delete that. Okay, but as you can see, like, it's rejected a 6-6 and it's just downhill from there. Tried a little long there. That was bad. That didn't work out. That channel was terrible. Yeah, let's squash it in. Okay, the RSI on SUI 4 hourly is 26, 15 minute 36. So it's still quite high on the 15 minute compared to the 4 hourly. There's deviation there. Okay, the hourly here is 34. What was that? 35, 34, 4 hour 26. There's like 10-point difference. Okay, the daily, let's have a look. Okay, the daily is the same as the 4 hourly. The weekly is pretty much the same as the 15 minute and the hourly. It's in the 30s. Let's have a look at the monthly. The monthly is still quite high. Okay, in relativity. Relativity, is that the right word? Probably not. There's nothing on the MACD though. So there's no MACD signal at all on the monthly. Okay. On the weekly, it's bearish. You know what? Let's have a look. Let's have a look. There's the low. Take it to the high. Okay. So it's approaching the 0.236 with a RSI of 34. That could be quite strong. Okay. Because if you were to base this, now this would be a weekly trade. Okay. If you were to take this. Okay. So say you went long on the 236. Okay, you'd be targeting the 786. Okay, where would you put your stop loss though? I'll probably put it just underneath here. So it's at 1.483. About there. Okay, so you could make a 47-hour trade, maybe, or you could play it safer and put a wider stop loss. It's up to you. You know, I'm not your boss. It's how you guys want to do a trade. But like on the weekly time scale, that's potentially a good trade. Okay. But of course, nothing ever, the market doesn't give like we want it to give. Okay. So let's do a resistance or downtrend, for example. Okay, so let's do a bit more realistic. Okay, we could see short term a 22-hour trade. Yeah, that's still not bad. Okay, still not bad. So, and if you're using leverage, for example, as long as you can afford the funding fees, you could potentially, you know, say it bounces off, comes up, okay, and then it comes back down. You know, there's no reason to close it. It could do this, for all we know. Make a reversal. Yeah. So we could try and time the market, or we could play what we've got. I mean, that's a possibility on SUI. I'm not saying that is what will happen. Okay. Generally, from my experience on Fibonacci only, when it bounced off the 236, it's extending to the 786. Okay. So you could set a target at 440. Now, if you entered it down here, okay, can you afford the funding fees to hold it, or would you close it up there? That's up to you guys. Wait for it to come back down, look for an entry here and maybe back down here. The thing that scares me, and I'll be honest, the thing that scares me looking at this chart is this wick. Okay. Now there is actually a wick theory, and I'm not on about wick off before you go there, Lewis. Now, there is a wick theory where the wicks direct where the price is going to go. Okay. There's a theory to everything, and there's some truth in everything. But for a theory to happen, there needs to be a basis of truth within it. Okay. That doesn't mean that it's actually going to happen the way it is. Okay. But yeah. Now, if we went to daily, see how the lines sort of change a little bit. Okay, you could see that maybe around now you could possibly enter and set it just below, whatever. Okay, but the lines slightly change, not too much. It's just the way charts work. There's no longer the pattern there, but I'll leave it like that. Okay, what could happen here on the daily, if this happened, okay, if that happened, that would be just as cool as well, to be fair, on the daily. Okay, let's have a look. XRP is holding quite well, really, isn't it? And a massive push once the court settlement went. Good on them. Now, near, like, I'd drawn this ages ago. I'm not even going to lie. I think I've probably done it the last time I streamed. It was that long ago. Okay. And look, it's still playing out. Okay. So is this going to come back down now? And look, this is a wedge. Let me draw it. I'll draw a triangle. Okay. It'll turn it into a wedge for me. So 1, 2. Let me just extend that to there. Okay. And then I'll draw the path. I've had this for so long now, and it's just, you know, near is so easy to trade. Okay. So it didn't even come back down to the bottom. It shot up. Now, unfortunately, that was a bull trap. Okay. This was a blatant bull trap. Okay, and then it dumped massively. It's come back up another bull trap, and it's coming back down. We'll see where this goes. Okay, can you tell me why that? Can you tell me why they're bull traps, guys? See, I even had that marked. Not actually for that specific candle. That's purely coincidence. That I was just like marking it. Okay, as a potential entry point from when I'd done this. I think I'd marked this out back here sometime, and I'd drawn. So that was purely coincidental. Okay. Let's have a look. Since price were first, yes and no, but as I said, like I said earlier in the chart, in the stream, the chart gives you the information you need, so it tells you when you're late to a trade. Okay. Now, near has been relatively forgiving. Okay, let me do the. Guess it'll have to be the path tool. Okay. So you've identified the top and you've identified the bottom, and it's retested the top. Okay. So that should have been, if you're trading, we'll do this again. Okay, you'd be entering here and you'd be targeting down the bottom. Okay, you'd have your stop loss just above the previous candle. You always wait for the second candle. Never do it on the first candle, because the first candle can come up, wick you out, and then you're invalidated. You want the second candle at least. Okay, so as soon as the price sort of went below, okay, then you do it again. That's when you enter. Okay, so that would have been a 15-hour trade. Okay, now if you played this right, again, you've got to understand it is so easy to show this in hindsight. Okay, but you play that to the top. Okay, now because you've identified the range, you can then play it again to the bottom. This is why near is so easy. Okay, except this time it took longer to get to the bottom. And what happened? What happened? Can you see it? Obviously, you got stopped out, but there's a bit of price action where people's entries were up here. Okay, what happened was people clocked on. Okay, so the market gives, but the market needs to take. Okay, we don't control the market, we just play it. Okay, so for those that tried to play the long down here, they'd have got stopped out. Okay, the market's warning you here. Okay, the market is warning you here. Now you could potentially hold it again, and you could think, oh yeah, great, you know, like it's actually going to go to the bottom. Yes, it is going to go to the bottom, but the market gave you a warning. Okay, it didn't stop you out, but they were nice enough to give you a warning to say, we are going to stop you out. Okay, and this is what happens. People get greedy. Okay, so over here, when the price is pushed up above, it stopped everyone out because everyone's playing for the bottom of the channel because they've identified it, they've played it, and then now they're trying to play it again, but the market stopped them out. Okay, now the other thing, okay, is it would also be stopping out late people. Okay, so for example, here, if you're trying to play it to the bottom, okay, you've got stopped out. Okay, and the reason why there's a bit of action around this level, okay, for example, if you got in over here, you're fine, but you can see the entry price. It was closing. Why was it closing at the entry price? Okay, because this is people that have watched this and they're putting chance orders in. Okay, they want that again, so they're putting chance orders in. Okay, taking the stop loss up, so it's outside. Okay, so they're playing this setup again. Okay, so the market's given, but this will be chances at this point. Okay, people that got that, or it's people that have. Can you see the pattern there? Can you see the pattern? Can anyone tell me the pattern that is within this part here? And you're trying to say that if the price doesn't hit the bottom of the channel before retesting the diagonal resistance, then it is a warning sign. Yeah, basically, there's a bit more to it than that. Okay, so if close, Lewis, turn that M into a W. I mean, you got an M there actually, so yeah, I'll give you that one. But that I was on about this specific point. I'll get to your question in a sec, all right, Faisal? So basically, it's producing the W. Yeah. So and then, boom. Okay, this is the liquidity grab right here. Okay, and then it pushes down. I don't like saying liquidity grabs. Okay, because I don't believe in a liquidity grab per se. I just see it as market makers being market makers. They give and they take. Okay, that's the way I see the market. Okay, so this is just liquidity here, basically. Okay, and basically what they've done is people that have identified this. Okay, there isn't many people. I haven't seen this chart anywhere. Not sort of trying to be too big-headed here. But that people that have identified this pattern, okay, they'd have entered a short, okay, because they've seen it play out so many times. Okay, so they've entered a short, they've got stopped out. Okay, now if they listen to the candle close, okay, and played it, okay, they'd have made some nice juicy profit. You know, it wouldn't be as good. Okay, it really wouldn't be as good. But I mean, you could have set the stop loss somewhere around there, like, but it's still a trade. Okay. But again, as Lewis said, like there is an M pattern here as well. Okay, and the M pattern is here. So the W has now turned into an M, and it's gone straight down. Okay, so that shows a reversal coming back up to the top. Okay, so and basically you identify the channel. Okay, and all I did here, I identified this back here, top and bottom. Okay, 2 touches on the top, 1 on the bottom, confirms the either the wedge, the channel, whatever you're looking at. Okay, 2 at the top, 1 at the bottom. Okay, or 2 at the bottom, 1 at the top. Okay, it will confirm the pattern play out. Okay, once you've got that second touch, play it. Okay, don't hesitate, play it. Be smart about it, position yourself properly. Okay, and then play it to the bottom, and you can play the bottom as well, the second touch. Okay, what happened on the third touch? Again, Okay, this is market makers. They've gave you your chance, but now too many people are noticing it. So too many people are noticing it. Too many people are wanting to play it. The market maker doesn't like it, so he stops you out. Okay, and people who think they're clever by putting a wide stop loss on it, you know, there's a 12% move to the downside. They're still getting stopped out. Yeah. Now, all right, that's a bit of a freak wick there, but is it though? Is it? Let's put it into context. Look at this. How high of a move did they have to do to stop people from winning here? Okay. How high? 17.4% they had to put that stop loss on to make that effectively a 2R trade. Really? Because that is how people trade. Okay. The charts give you the data. It's up to you how you perceive that data. Okay. So the earlier you identify it, the better. Okay. Because the third time, it might give it to you. Okay. It did give it to you, but it didn't give it to you as good. Okay. It gave you a chance. And then it come up and it gave you a warning. It's like, okay, all right. I'm not going to give you your full take profit yet. You know, this is your warning. Get out. Okay. And it gave you your chance to earn half your profit, half your take profit. Okay. And then it stops you out. Why? Because you're being greedy. Okay. So you have to look at the data as it progresses. When people say, oh, but you know, you predict the market bullish and you predict it bearish, and you know, you're just trying to be right either way. No, it's you're dynamically adjusting to the market as the market changes. Okay. This chart on there, I haven't changed until now when I've just drawn these areas in for you guys. Okay. If you're not prepared to play the levels, as you said, Lewis, I just read that as I said it. If you're not prepared to play the levels, you're not going to succeed in this market. Okay. Hey Ghost, yeah, I am recording it. I'll put it on YouTube afterwards. I've also got it on Twitch as well. I'm streaming it on Twitch as well. Although I'm not actually watching Twitch. I wonder if anyone's over there. Let me have a look. Why is this so slow? Okay. Yeah, so hi Jay. I don't know how many people are watching on Twitch. 2 people. That's cool. Let me close that because that's awful. Now I should have the Twitch chat up. I just haven't streamed in a long time. So for the people watching on Twitch, it's been a while. Sorry, I'm gonna start making it more regular again. Hopefully, get people back. But yeah, I mean, I'll get it on YouTube as well, Ghost, afterwards. Okay. So in terms of near at the minute, what am I looking at? We've got a bit of support. In fact, hold on. Faisal asked a question. Trying to say that if the price doesn't hit the bottom of the channel before retesting the diagonal resistance, then it is a warning sign. Potentially, yes. So it's just like channels. Okay, let me go back to Bitcoin real quick because I've got a channel there, so it'll be nice and easy to explain. Okay, so on a channel, okay, you have a midpoint in the channel. Okay, that's this blue dotted line coming up. Okay, when the price comes up, okay, once it's at the top, it's guaranteed to come back to that midpoint. Okay, so you always watch what it does at the midpoint. Okay, if it breaks below, it's going to the bottom. Okay, then it comes back up to the midpoint. You're watching what it does. If it breaks above, it's coming to the top. Okay, this one, it kind of went up, which was kind of your first warning. Okay, and I'll explain why it's a warning in a minute. Okay, come back down to the midpoint. Okay, which was the second buy-in because it's on a point of confluence. Okay, this was your first buy-in, that should have been your second buy-in. Top of the channel. Okay, now I did actually put a post out at 123,000 saying that I thought it was the end of the run. Okay, I did. That's in my channel. And I still stand by that. except I am optimistic that we will still see higher. It's a bit complicated, but that is what the charts say. Okay, I can't say anything different to that. Okay, yes, I do think the top is in, but I'm also optimistic that we see higher yet. Okay, it all depends what happens next. Okay, so then from the top of the channel it comes back to the midpoint of the channel, to the top, to the bottom, like midpoint, bottom, bottom, midpoint, top. Okay, so with that in mind, it's like with any pattern, where's near over here. Okay, now you can't actually see the midpoint, but you can visualize it. Okay, so the midpoint, let me try and draw where I think the midpoint would be. Let's go from here. No, wrong one. I use arrows a lot because for me, I'm a visual worker. Okay, I'd sort of say that's about the midpoint. Yeah. Thanks, Peter. It's a bit complicated sometimes. I'll confuse myself, but I'm glad you think that. Okay, so as midpoint, yeah, look at the way it reacts at the midpoint. So I don't need to draw that line because I can visualize it. Okay, if you can start visualizing what you're drawing now for other people, I don't mind drawing what I see to explain it a bit better. Okay, because ideally I want everyone to succeed. I want you guys to succeed. Okay, if anything else, if I don't even make it in this market, if I don't get rich in this market where I can buy a house and, you know, have my own bit of land that I can raise my kids up on, you know, and teach them about how life is, if I can't do that, it doesn't matter. Not to me, because as long as I can help someone achieve that somewhere to me, then I've succeeded. Okay, there's plenty of ways of being rich without being rich financially. Okay, so yeah, when it's come down to the midpoint and come back up, okay, it's a warning because it hasn't broke above. Where it's gone above, it closed back below. On the retest, it didn't bounce off and bounce back up. Okay, and this takes us back. I'll leave that there for now. This takes us back to originally when I said, can you see the bear trap, the bull trap? I'll ask you once more now that I've explained a little bit more. Can you see where the bull trap is? Anyone? Recent leg up. So this one, I mean, it is kind of, yes, but it's not. It's not what I'm discussing, but yeah, I mean, basically that was another bull trap. Okay. But the main bull trap I'm on about is here, right there. Okay, I'll circle it because the price come up, it closed above. On the retest, this is where you're watching for your next move, the retest. Okay, on the retest it held and then it kind of moved up. So many people would have gone into a long. Okay, now because if they've identified this wedge, they'd be targeting up here for a wedge breakout. Okay, now I'm not saying this is why there was such a massive dump. Okay, because look what happened. There was this huge ass wick. Okay, that I think it was October the 11th. So many people cried. Okay, and that's because the market gave you the setup. And if you're trading this, okay, if you were trading the wedge breakout and you went long, okay, and you're targeting up here, because realistically that's where you should be targeting. Okay, now some people on an RR system, okay, would do it like this. Okay, so they'd have done that and possibly put that at about the midway point. Okay, because people they don't like to think they're greedy, so they're happy taking a lesser RR. But look, when you put that down there, even the ones that were trying to play it really safe for a 4.6R trade on a massive move, thinking they are not greedy, added to that liquidity. Okay, that was the bull trap, sorry. Okay, because so many people are anticipating alt season. So many people. Okay, the best traders in the world, they'd have gone long. Okay, and they've just got wrecked. Basically, the market maker went, nope, thank you very much for the liquidity. I'm not ready for alt season yet. Yeah, I'm not saying that's why, but I am saying that there'd be a lot of people that would have been caught out in that, a lot, for that reason. Okay, so now I'm not saying it's Nia's fault, because if you look about that time, there was so many setups on so many tokens, it was just inevitable. Okay, so then what happened after that dip? Okay, like if you were smart, as you've seen it come back up, you'd have played the long. Yeah, so if you played the long and then you caught the breakout again, like you made yourself 12R. Okay, now this again would have been a bear trap. Okay, but it's not as bloody. Okay, bull trap. Why do I keep seeing bear trap? Oh, probably because it's a lot easier and I've been looking at bear traps all season. Also, I'm tired. Okay, but yeah, that was another bull trap. Okay, and again, this here, playing off the top here, you know, that's giving people false hope, because it's not changed yet. Okay, so what you're looking at, okay, it's still within this structure, but now we're getting a bit of fluctuation, aren't we? Getting a bit of volatility. Okay, you're looking at the midpoint, it's bounced perfectly off the midpoint. I play the range and market as I see it. Okay, doesn't matter whether it's in a wedge, a channel, whatever. Okay, whatever the chart tells me, like I can't put a channel here. This is a wedge. Okay, Bitcoin, it's in a channel because the channel's there when it kind of wants to load up. I don't have hardware acceleration, so it takes a while. Okay, that's in a channel. I can't put that in a wedge because the channel's there. Okay, that's what the chart is telling me. That is the data. Okay, so I'm not listening to news. I'm not listening to hype or anything like that. And to be honest, I hate reading the chat sometimes because other people's opinions can phase your own opinion. Okay, the analysts we have, they're amazing, you know, but I don't follow their calls, not because not because I don't trust them, because I do trust them. They're all good, they're highly vetted, and a lot of them are a lot better than me, in my opinion. Okay, but I prefer to do my own analysis and take my own trades. Okay, I'll look at the analysts' opinions and their signals, and I'll see if it coincides with anything that I'm watching currently, and if they share the same opinion as me. But that doesn't mean I'm going to change my opinion. Okay, so there's always noise, and you have to learn to block the noise out. Okay, and sometimes that means hiding away from the chats until you do your analysis. Okay, so like that, for example, I'm actually pretty happy with that. Like there, I mean, this is a perfect little triangle, basically. If I draw this, like, it's not even a wedge, it's triangle. There's your top. Which one's this? This is iota. Okay, let's draw it at the bottom to here. Bring it across. Okay. 5 bar up today. Nice one, Peter. I think you're great, Peter. Like you've literally took everything I taught in the mentorship and just applied it, you know. And not to knock my other students, they all do well. They've all applied stuff. But there are some more active than others. Okay, the main thing is if you do not apply it, if you don't do it, you're not gonna succeed. You're not going to be able to do it. Yeah, no, like the truth is, it's hard. It really is hard. Okay, and you have to do this every day until you get used to it. And I say to all my students, try and put at least 1 hour a day into looking at the charts. If you can do that, then you're going to succeed. Okay. But if you can't even put an hour a day in, I mean, I'm not going to judge you. Everyone's life is different. But if you can't find 1 hour a day or even 1 hour a week, you're not going to succeed. Okay. Not if you want to really learn and understand charts. But on this, for example, like it's closed below, which that isn't actually surprising because descending triangles are generally a bit bearish. I think generally when I draw them anyway. Let's have a look, but I can't see it going much lower. 10 cents on IOTA maybe. But then, like, if you look at the structure, like Smart Money Concepts, I believe, teaches you lower highs, higher lows, and follow the structure. Okay. I'm gonna say something that is so controversial right now. Okay, it's a scam. Okay, it's a scam. Lower highs and higher lows, yes, they work. Okay, but all they are is a channel. Lower highs and higher lows, and higher highs and lower highs. Yeah, it's the same thing as a channel. Why complicate it? They're literally teaching you the method of a channel in some other make-believe situation. That's my opinion, and that is so controversial. I wouldn't be surprised if it causes an argument. I'm not here to argue, by the way, just saying. Okay. Yeah, no, that's understandable. I mean, like, okay, yeah, no, I'll agree with that, Lewis. It's a different method of teaching it. Okay, there is different methods, and people's brains do work differently. So, okay, I didn't really look at it like that. I'm not backtracking on what I said. I'm just agreeing with what you said because it's a valid point. It's a different way of teaching it. So let's have a look. I have like 3 hours max every day to read chats, but still succeed. Yeah, see, there you go. Good on you. I mean, like that's 3 hours a day that you're putting into this, whether it's the charts or chats or whatever. You know, you're putting time into it, Peter. Yeah. If I had to start again from the beginning, knowing what you know, what would you focus on in terms of TA? Support and resistance. Absolutely, support and resistance. If I had to truly focus, okay. And when I say support and resistance, if you watch the recap of the video or the start of the video when I post it, you'll understand about diagonal support and resistance. Okay, I haven't seen anyone in this space teach diagonal support and resistance. Okay, but I teach it to my students. I tell people about it where I can. I've had people telling me it's a load of nonsense, this, that, and the other, and that's fine. There are so many different ways to trade this market, but for me, diagonal support and resistance, and channels. That's it. Okay, those two concepts: support and resistance, and channels. And actually understand it, okay, not just drawing pretty lines on a chart. Okay. Yeah, I mean, always do your own research as well. But that's the two things I'd focus on. Okay, and then from that you can build up using Fibonacci. So let me go to my channel real quick and see if I can find an example here. Okay, I'm gonna have to go right back to the very start. It's like March, April 2024. I think, is the very start. Let's have a look. Yeah, I'm waiting. Okay. All right. So 9th of April 2025. I'm going to screenshot this and drop it in the chat. Obviously on Discord for the Twitch users. Sorry. You won't be able to see it. But it's there. Look. 9th of April 2025 when I just got started. What am I using there? Support and assistance. Diagonal support and assistance. That's it. Okay. That's pretty much how I started. Okay. That's where you need to start. That's where anyone needs to start. And I say this all the time. It's the bread and butter of trading. Because from that you can then start learning Fibonacci. Okay, from that you can then go start learning Elliott wave theory. You can then go and start applying the support and resistance to time period trading, to scalping, whatever you want to do. Okay, I don't scalp. Peter scalps. He's took what I've taught him and he scalps. Okay, it's like, it's not my thing. For some it is, I guess. But yeah. Let's have a look. Thanks to Vito. My mindset's a bit unorthodox, I assume. Oh, thanks, bro. That means a lot. I'll just read that comment out for the Twitch users. So DeVito said, it's the best live I've been in since I joined the group, hands down. For some reason, you explain things in a very simplified way, not over exaggerated, just straight to the point and what really works for you. Thanks, man. That is like basically my goal. Okay. So it is, I don't believe in overcomplicating it. I want to go and learn Elliott wave theory, but every time I go and look at Elliott wave theory, everywhere I see that explains it, I get bored reading it, because if I can't grasp it within 5 minutes, I'm not interested. It's people overcomplicate the simplest of things. Okay, when in reality I could go here. I could get the tool when I find it. Hold on. There you go. The Elliott impulse, a 5-wave move. Okay, 1, 2, 3, 4, 5. There. That's the Elliott wave theory in a nutshell. Okay. Why do I want to go and overcomplicate it? Okay. Now, obviously, don't get me wrong. I am not undermining people that trade the Elliott wave theory. Okay, because some of the best traders I know trade using the Elliott wave theory, and they do it far better than I ever could. Okay. But I don't know the Elliott wave theory. Okay. But that what I've drawn there is technically valid. It's a 5-wave impulse. Okay. You have a move up, a reconciliation, a move up, a reconciliation, a move up. Now the thing is, you can do that on a fib. Let's draw the fib in the same area. Okay. So from there to there. Okay, so have a look. It's come up just past the 236, come down just below the 236. Then it's pumped up to the 786, come down to the 382. Okay, that's important to know. When it bounced off the 786, it's almost always coming to the 382. When it bounced off the 382, it's almost always coming back to the 786. Okay, so from the 382, it's gone up to obviously the peak. Okay, then from the peak, it's come back down to like the 236, maybe just a bit below. Okay, so you don't need to learn all these fancy tools. The ones I would say go looking at, actually, for me personally, it is Gartley's bat patterns and crab patterns, bats and crabs. Okay, I am actually quite interested in them because they are W's and M's, and I see W's and M's across everywhere. Okay, so if you want to learn harmonic patterns that is, in my opinion, similar to an Elliott wave and Fibonacci, go and learn about bats and crabs.
It's going to be on my to-do list for next year, I think. I've got a to-do list as long as my arm, but I never actually do it. Okay. Right. Anyway, so we're not really looking for setups today because, in my opinion, I did want to try and find setups. Okay, but in my opinion, everything at the minute is, if you're not in a position or you haven't already got your orders set, currently everything is in a no trade zone. Okay. So what that means is sit tight. What was it they say? Sit tight, buttercup. Be patient. We've just got to wait for the setup. Okay. So I'll put a limit long out on Bitcoin. Your first entry should have been here on this line here. Okay. 93,194. Your second is the 0.66, 93,222, and your final will be this one, 88,137 as limits. Okay. And this is your invalidation, 85. Okay. Well, like Peter, like when you say find time to look for setups, the thing is like I can't go across against my analogy. I'm a long term trader. I trade mainly off the daily. I look on the 4 hourly. Okay. Now if we went on a shorter time frame, I could potentially find one. I could. I could say going on Bitcoin now, but like I've already got a limit long on Bitcoin. You should already be in it. Okay. If I go looking at the other charts, if I'm reducing myself down to a smaller time frame, for example, it's not going to do anything because let's look at Link. Okay, let's use just quickly. This is what I was saying. Goes about diagonal support and resistance. Okay, on this screen you can see it, but it's like if you go looking for a setup, it's because you're in the mindset that you have to be in a position. Okay, when the truth is you don't have to be in a position. Having no position is sometimes more of a win than being in a position. Okay, so let me do this. Okay, so this is the pivot points here. Okay, so we're allowing for noise. So as long as this keeps holding along this trend line, we're still going low. You can't enter a position here because it's not at the top. Okay, and so why would I enter a position here? There's no position to be had safely. Okay, in my opinion. Okay, I'm sure someone who trades on a 5-minute or a 10-minute chart might try and find a position. That's fine, but for me, there is no positions to be had. Okay, the charts aren't giving me that setup. Live trading, it would be boring. I could tell you, live trading with me would be boring. As I said, I trade over longer time frames. So can you imagine that? Be like, we're all sat here with long beards going grey, like, why isn't he in a position yet? Sorry guys, the charts aren't telling me to be in one. But yeah. My risk management strategy. I don't actually know, to be honest. I mean, general advice really is never risk more than 1 to 2% of your port in a trade ever, and then you can't ever be liquidated. Don't be in more than 3 positions at once, so maximum risk on your port should really be 3 to 6%. And don't lose more than 6% a week maximum. If you lose 6% a week, then you're not going to last very long in trading. People seem to think that you need to get rich quick. Okay, but accumulated gains over time is going to be your friend. Now this will make you all laugh. Now I did have all my statistics on my website, so like on my bot, I've got it so when you put trades in on your bot, using my bot, it tells you your stats. I did have it all here, but then I kind of moved house and lost stuff on my home server for, yeah, I'm not going to go into it, but I ended up losing all my data, which was a bit annoying. Got to try it again. Start again effectively on that front. But it was, I believe I posted a screenshot of it somewhere in the Discord. I think I had like a 36% win rate on RR trades with an average RR of 9.62, something like that off the top of my head. So a 36% win rate with a 9.62 RR reward is pretty damn good if you ask me. But yeah. Oh, that's interesting. Join Slick Chicks crypto live stream announcement. I'll have to have a look into that. That's funny. It's actually my stream, not Slick's tonight. Sorry. Let me see if I can go find that picture. It should be in my channel somewhere, or in the Discord somewhere. Be quite a way back now. I always like to try and prove what I'm saying when I'm saying it, because if someone just joins and they don't know what I'm talking about, then it's like, oh really? Oh, you're just one of them that like says they're amazing. And no, I don't say I'm amazing. There's a lot more I can learn. A lot more. There's a lot of people in this space that have been doing it a lot longer, even a lot shorter, and know more than me, you know. But when I get it right, I do get it right sometimes. And I just want to share that with people, really. Going through this chat trying to find it. It's absolutely miles back. What's that one? Okay, so here's one from the 13th of August where I've got a 53.33% win rate with 17 total trades, but it doesn't tell me what my profit and loss is because I didn't. Doesn't tell me the RR. Oh, I've just posted that in the wrong chat. Let me delete that. No. Yeah, have fun, bro. Yeah, see that's the way to do it, Tabito. When you say you've got your own way, you know, and you like to implement certain tools from other people, that's exactly what it's about. It's finding your own way in the market. Okay, it doesn't matter. Like everyone can show you their best strategy in the world. Everyone has the best strategy in the world, but it might not be the best strategy for you. Okay, that's the most important bit of information there. You know, everyone goes on about how their strategy is the best, this, that, and the other. Like, it's rubbish. There's good strategies and there's bad strategies. Okay, now a good strategy for me might be a bad strategy for you. It is the long and short of it. I'll be very surprised, but that is the truth of it. If you can't comprehend the way I trade, it's going to be bad for you. Yeah. If you don't understand it, if you can't understand it, it's going to be bad for you. There's nothing I can do about that. So then, exposing yourself, I say to all my students, okay, I know I've been saying it a few times today, but with the mentorship, for example, okay, I take people from a beginner level to an intermediate level, okay, and then from there, they're effectively on their own, you know, but I've gave them the tools to then go and learn about more advanced techniques with an actual solid foundation, which not a lot of people actually have in this space. Okay, I don't claim to, like, I don't tell people that if they follow me they're going to make millions, because the truth of it is I've got no way to influence your decisions. Okay. Peter, you're confusing, bro. But like that's the long and short of it. What works for me might not work for you, and what works for you might not work for me, you know. Peter's actually a prime example of that. He took what I taught him and he puts it on a 5 or 10 minute chart. I can't do it on a 5 or 10 minute chart. Like I can't, you know. I just mentally I can't. But anyway, I'm going into the realm of rambling. So I'm pretty much done with the charts. As I said, there isn't a lot there, position wise. It's at that point where it's either going to bottom out or it's going it's either bottoming out now and going to take off again, or it's going to just everyone's going to be crying. So like there's no trades to be had right now if you're not already in a position. It is my opinion. The market looks prime and ripe for some longs. Okay, it does. When it's bottoming out is always the best time to get into a position, but in case I am right and the topic has been put in, it's not worth trying to chance some longs, but yeah. I mean, I've got a long open on Bitcoin based off TA. Could be wrong. We don't know till it plays out. Okay. Do you think it's sensible, in your opinion, to have more risk when trying to build a reasonable capital? Do I think it's sensible? No. Do I think it's a okay, so if I've got a $10 port, okay, I'm still risking $1 a trade. That's 10% of my port. Okay, but I've got a $10 port. It's a throwaway portfolio. Okay, so I will risk more than what I should. Okay, when you're asking if I think it's sensible, no, not at all. Okay, for a start, not everyone can afford to just chuck in $10 ports and gamble it, because that's what you're doing. You're gambling it. Okay, you're not trading it. You're not being methodological or methodological. I don't know, a big word for me. You're not doing it systematically. Okay, trading isn't about big wins as fast as you can. Trading is about accumulating wealth over time. Okay, don't expect to put money in today and come out next week richer than you can think. Yes, it has happened for people, especially in crypto. It has happened, okay? But if you go in with that mentality, you're going to be sorely disappointed. Okay, trading is hard. You have to be cautious. You have to be careful, especially in crypto. When you hear people say that it's not normal for these candles to happen. Okay, 17% move there, but why isn't that normal? Okay, why isn't that normal? If we go back to 2018, okay, I mean, it's quite a few years ago now, but that was normal. Okay, so this is crypto. Crypto is highly volatile. You have to protect your portfolio as much as you risk your portfolio. Okay, so be smart. If you play the game, don't let the game play you. 1% of people on Pump have been profitable. Okay. Last time I seen someone crunch the numbers on Pump.Fun, I think they came back saying you had more chance of winning the jackpot in a casino than you did winning on Pump.Fun. Let that sink in, because everyone knows, okay, everyone knows that the house wins. Okay, the house wins regardless, and you might get lucky once in a while, but the house wins. Okay, you've got 3 times more of a bigger chance of winning in a casino than Pump.Fun. Okay, just don't do it. I understand, and I hate to say this, but I understand why the FCA in the UK banned Pump.Fun. 100%. I understand it. And that says a lot, because I don't always agree with their decisions when it comes to crypto, but that one I do. Crypto's a dangerous space, mate. If you don't protect your portfolio, okay, I've heard stories over the years of people quitting. Yeah. Not in a nice way, because they've risked too much and they've decided they want it out because they've lost. Okay. There's serious consequences if you don't protect your portfolio. Okay. You can lose your house. You could lose your car. You could lose your family. So it's just not worth taking the risk, is it? Let's be smart. Now, if you can afford to do gamble ports, okay, and you want to risk more, that's entirely up to you. Okay, I do sometimes. I'll put a little $10 port together and have a little play, see where it goes. I've turned it into $200 before, and then I've lost it again because it's a gamble port. I turned $1 into $800 with Cardano when everyone was telling me that you can't make money with Cardano, but I did. Well, I didn't because I didn't take profit because I was so adamant it was going to go higher, and it went up and it come back down, and that's the way it goes sometimes. But yeah. All right. Anyone else got any more questions? Yeah, I mean, right. Protect your capital, especially if we go into bear season. It's actually easier to make money in a bear season than it is a bull season, I think. That's a story for a different day. Oh, you're welcome, Simba. So, but yeah, I mean, obviously, I'll go through all the concepts a bit more in detail in the mentorship if anyone's interested. The links are all in the Crypto Hub Academy channel. Okay. But I mean, it's entirely up to people if they want that. I don't force it on them. And I do say, you've got to invest in yourself. Okay. If you don't invest in yourself as much as you invest in the market, you could be trading blind. You try to argue, but I won't. No, feel free to be I'm not argumentative. Okay, I like healthy discussions as long as everyone remembers, keep it civil. Remember that people have different points of view, different opinions. Okay, my reality is not your reality, and your reality is not my reality. Okay, as long as people agree to understand that key concept, then have a difficult conversation, because that is how people grow. Okay, but the second it turns personal and people start throwing names out there, no. So that's just where it goes. I mean, I tell my students straight sometimes. I'm like, what the hell are you doing, mate? I've even said it to Peter. I'm like, Peter, you disappoint me at times. So but yeah, it's like, but at the same time, I'll tell people when I think they're doing well. And if you can't build someone up, okay, you can put someone down in a constructive manner and have a difficult conversation and mean well for them. Okay, and it's all about how you compose yourself and put that across. If you're just going to be an idiot about it and start effing and blinding and just trust me comments, that's not how a conversation works. But yeah, I'm all for it because I've learned a lot from some difficult conversations, and I have, unfortunately, I've been guilty. I'm only human. Of taking things too far myself, we're all human, but yeah, if you can bring it around and be civil, it's fine. I tried to create a channel in such a way that touched the bottom of the channel. Okay. I mean, I don't have the timeline because I don't have hardware acceleration on, but I presume you're talking around here, I think. So my channel was drawn from the bottom. Okay. The thing with channels, you have to allow a bit of noise. Okay, so for example, if I go to this channel and I try bringing it to the very bottom, for example, okay, it only touches once here. Okay, so if I bring it up, okay, I've got 2 touches here and here. I've got no other touches anywhere. Okay, instead I started it from the bottom, okay, down here from the start, so right at the bottom, and I've drawn it across in such a way where there's a touch here, there's a touch, a touch, a touch, a touch, a touch, a touch. Yeah. So basically, yeah, we could say that it's broken to the downside now. Okay. But my theory being, just a theory, okay, is because I allow noise. So noise is like movements outside the channel bottom and the channel tops. Okay. I've got like a 9% down movement outside of the channel here. So I could theoretically allow for up to 9% up here, which is where my stop loss is. Okay. I mean, I'm not actually in this trade, but that's like, as I said at the start, I haven't traded for a while because I've had issues with my ID and having to KYC on exchanges, not because I don't want to or anything like that. Okay. So if we're allowing for noise, now the amount of noise outside of the channel that you have is purely dependent on yourself. Okay. I can't tell you what is acceptable because for me it depends very much on 1, the chart I'm looking at, 2, the volume, 3, the volatility, and 4, the price action. Okay, so I might allow 1 or 2% on a channel, or I could allow 10% on a channel. Okay, the point is you allow for it. So by allowing for it currently, yes, we've broken down, but I've got 1 and 2 DCAs outside of the channel. Okay, and then from that, then my stop loss is literally about 9% below, which is where the previous lowest movement out was. Yeah, there you go, 9%. That was just below there, which matches this move here. Okay, so when everyone was saying about how it's the end of the season and stuff like that, I'm like, well, actually, no, it's not. You know, that was back then. I said it here as well. I've said it here. I've said it here, and I'll say it up here until proven otherwise. Now, if we lose this line, this 85k, we're looking at 74, 75 for long-term confluence. I'm not just trying to sort the chart out a second. So from long-term confluence, so from down here, okay, or the start. So if we lose that level, we're there. But the downside of that, okay, the downside of that, and this is a risk factor, okay, is if I'm seeing this, okay, this is the invalidation of this channel as far as I'm concerned, okay, so I'm looking, I'd be saying, yeah, we're in a bear market then, okay, but then by saying that, okay, we've missed all of this move all the way down, okay, but that's not a problem because I already called the top up here. I'm covered. You know, I called it. It's in my chat. I can't take that back. You know, sorry, but this takes me back to you play the levels. Okay, so if you play the levels, you can't go wrong. So, but yeah. Any other questions? Anybody? Well, on that note, then I think I'm going to call it there. And thank you very much for turning up tonight. It's appreciated. And hopefully I'll start doing this a bit more regularly for people. See how we go. Okay. Again, thank you very much and have a nice day.